Good.
Hello everyone and welcome to Amsterdam Bootcamp at Hackers League Hackathon. My name is Kate and I'm head of hubs, and literally now I'm in Amsterdam, and now I would like to present you our special guests of AMA session, Vlad DeGen, DeFi Lead at STON Foundation, and Slavik Baranov, CEO and founder of STON.fi. And now we will have live talks and AMA session. Please join us now.
Hello everyone, thanks for coming, and let me briefly introduce myself. I am Slavik, I'm CEO and founder of STON.fi, and we are leading DEX in TON blockchain in terms of TVL and number of active wallets. And actually we have around 1 million of monthly active wallets, and I think it's around 2,500,000 of total active wallets. That's pretty impressive numbers for any DeFi product. And we have started our company 2.5 years ago. And recently we have released second version of our contracts, of primary contracts of our DEX. And now we are working on OmniStone. That's general purpose liquidity protocol that allows a lot of fancy features, including, for example, trustless cross-chain swaps based on atomic swaps approach. So thank you everyone, and I think it's Vlad's turn.
Yeah, my name is Vlad. I think you already know me, so I'm Vlad DeGen, DeFi Lead at STON Foundation. Today we did kind of join our session with Slavik to talk a bit more about the DeFi, about our hackathon and the bootcamps and all. And I would love to have kind of some family discussion to discuss with you guys what could be better, what challenges we're facing right now, and what we can do, what else we need to do in the TON ecosystem, what we don't have in the TON ecosystem. And we're ready to listen all of your pains, like what do you think, what we can, I don't know, change, what else. And regarding this bootcamp, regarding the hackathon, this is a great place where you can find a team, where you can develop a new protocol. And even in our ecosystem and across other ecosystems, the hackathons is a good place where you can start and grow your product. And a good example also from the hackathons is the DDoS team. They grew up from the hackathon. And already from our past hackathon, we have a few protocols which already in the open league, the protocols like Aqua, Setaton, Paraton, Tradur, TonHedge, and all of these teams are from the hackathon. So the bootcamps and the hackathon is a great place to start your journey. And it's possible because also we are here to help you, to challenge your ideas, to prepare you for the pitches, to prepare you for the VCs. And on the bootcamps, you may have more chances to win the hackathon. So, Slavik, I suggest to do such a things. Let's do maybe some AMA session first. You have many questions. If you have questions for me, I have a few questions for you. And the second part, let's take all of the questions from the audience to us. Okay, great. Please go ahead. So, from my side, I'm personally a user of STON.fi. I'm a user of the old DeFi in TON. I also have in my wallets the governance token of STON.fi. And from the whole perspective and from the whole picture of our ecosystem, what do you think? What else we need? What niche we should cover? Like what should be there for sure? Maybe this is a part of your roadmap. Maybe you think like it's good to have independent team to cover some other parts of the ecosystem.
I would say that for now there is not much fundamental utility of tokens in DON blockchain. So there is some, it's way better than used to be a year ago, but still like we have a long journey ahead of us in terms of utility. So like the success of, I believe that the success of DON blockchain is in users, retail users using it like to solve everyday tasks. I don't know, micropayments, subscriptions, peer-to-peer payments, and so on. It's all already possible, but probably the adoption is like not as broad as it could be.
That's a good part of the discussion. So I think we can do some brainstorming. I'm gonna start from my part. I totally agree with the micropayments. I totally agree with the user base of the Telegram. So right now, all of these top-tier applications, like well-known top-tier applications, they prove that it's possible to attract, convert these millions of users and start to educate them. Like, this is the wallet, this is the blockchain. But what else next? So we don't have these utilities. I totally agree. And I think the major problem here that most of the teams who are doing the top-tier application, they not so experienced in DeFi. And most of the teams who are doing DeFi don't want to do the top-tier application. That's true. And from this side, imagine, let's think about the ideas, how we can combine the part of the top-tier, this kind of tool which is amazing to attracting the audience, which is very easy, and the part from the DeFi to propose the utility. And from my side, I think spent already a few months just to think like, okay, so if we have such a user base, what they need also depending on the regions. And if we can just check, walk around and speak with the people in our CIS region, what they need, what they do usually. Usually they use microloans. You agree with me? Yes, and they do payments like between themselves for such needs. Yes, and what else? Also, they do savings. So they're using bank applications to save money to put it into the deposits, and that's kind of one of the, I think, simplest and a good ideas to sell for the audience and sell for the VCs too. That what if going to be the mini app with one simple feature, just save money with some interest. Okay, as an idea is good, and the realization might be very easy for the audience. And we can also put some, I don't know, gaming mechanics to do it viral to attract the audience. But what should be under the hood? How we can provide some APR, not in a Ponzi-nomic way, with unlimited TVL. So it might be like for 1 million, or maybe for 1 billion, or for 2 billion, or for 10 billions. And only one thought that I have, it might be some kind of treasury bonds, or some strategies like Athena did for their stable coins. What do you think about this?
Basically, if we need to introduce some mechanics to earn yield on like unlimited TVL, we need some mechanics that will use this liquidity to earn interest. Otherwise, it will be just Ponzi-nomics without any like value other than scamming users.
Hello, Tara. Hello, Anker.
Yes, and well, like there are some famous protocols that already utilize this kind of mechanics. For example, famous Ethena that basically does arbitrage between spot and futures markets. So this is answer, and the USDE coin is like very successful. I think it has around several billion TVL, or three, something like that. But I think they have started a bit more than a year ago. So that's very impressive for for a year-old product.
And I think about all of these integrations. So I think for the retail users, that's very complex to explain them. Hey, this is the CLMM with the liquidity ranges, so you can provide liquidity in the ranges and you can trade, and there's a peak of the liquidity, and also there's some pods here in just-in-time liquidity, and people usually say you like, please go somewhere else. Because we cannot do speed words on the stream. And this is very complex. This is even very complex just to explain for retail users that this is a seed phrase and you should keep it and you shouldn't say or share it to any others. And what they already understand lending and borrowing from decades. Our grandfathers already did lending and borrowing. We are using deposits. I remember from my childhood, my parents said to me, okay, so we need to keep some money to, I don't know, have a vacation. Where are we keeping this money? On bank accounts. Bank accounts give us the feature to lock this money for some deposits and you can earn interest. And this interest, where it came from? It came from lendings. Because all of these banks providing loans, guys who take these loans, they pay interest and the interest goes to deposits. And that's usually how it works, and the people already understand it. So if the people already understand it, I think the most suitable and most sustainable way how we can attract all of these millions of users is to give them a simple and small financial tool in every pocket. And savings is one of these ideas, but around the Ethena, there's some questions. So Ethena works very good on a volatile market, while longs pay shorts, shorts pay long, and the interest is good. But what will be in the bear market? So there's going to be not much so users, and maybe interest they're going to be not so popular, like maybe even less than 1%. And from the other side, so if we can use all of these treasury bonds, there's so much legal there, because to buy some treasury bond, we need to have some broker, we need to have a lot of license, and the final problem, users must do QIC. If there's something in the DeFi with a QIC, there's like no DeFi.
And that brings like obvious idea of like building another like retail oriented product on top of these yield generation platforms that that closer to retail, doesn't require KYC, and maybe provides simpler like mechanics, for example, fixed rate, or less risky rate, where like professional market players take risks and get like more rewards, and the retail users take less risks but get like probably lower but stable yield rate.
Let's clarify this. Correct me if I'm wrong. So we have all of this DeFi ecosystem. We in half of the year we would have much more products. Like even half year before we had 10 protocols. Right now it's 37 protocols in DeFi Llama. And we have this ecosystem. All of these protocols. Let's take the major ones: STON.fi, Adidas, Stone Stakers, Bema, Storm Trades, and EVA. All these protocols in the interfaces for the retail users, they're very hard, they're very complex. But I think, what if we can create another aggregator, especially for the retails, which gonna provide some simple zaps, one-click solutions for the retail, but under the hood will be the full interaction of the DeFi.
Yeah, and that actually uses strength of DeFi. It's composability, and so like the ability to build products based on existing ones, like Lego blocks. And so, for example, if like Binance is huge, great company, but still on Binance.com can only appear the product like built within Binance. But in DeFi world, it's really easy to build something on top of something existing.
Totally agree. And that's also the part of the evolution in EVM. So I've been with EVM since Uniswap V1, and then after the whole niches of the DeFi, which is like bridges, lendings, IMMs, CDBs, and liquid staking, was covered. We got all other new products built on top of these products, or which can simplify it or combine it. Examples is InstaDApp. That's mostly Zaps, like this Web2 product Zapper, the same in the Web3, and they're doing these Zaps between the lending protocols. So imagine you can close your position in Alba and go to Compound in one click by using these Zaps. And that's the part of the evolution which EVM did. But EVM didn't have this connection with the Telegram, with the users. And they're mostly zaps for professional players in EVM. So they want to do leverage, deleverage. They want to do some complex strategies, and there's zaps for these complex strategies to farm points with some leverage, to put into the lending protocol, then to do the borrow and put into farming. And all of this for retail is very complex. But the part of the evolution which already been in EVM showed us it's possible and showed us it's covering the needs for users. So you don't need to go on all these protocols. You don't need to understand so much about these protocols. You can just use the aggregator. And over here with Telegram for retail, it might be more useful if it's just going to be like a one button there, save or invest, something like this. Even with be one button to invest in STON.fi pools, just to provide liquidity. Another the hood will be the transaction, which take USDT, sell half of the USDT to another token, then provide liquidity, and then put it in farming. So it's like some kind of zaps like this. I also see that's a really good part of the evolution. Another idea here is all of these farming opportunities. Right now, working, the part of them working on artificial rewards from the foundation. The part of them already working on the rewards from the protocols, and some memes also doing boosts of their pools. But what's going to be on the bear market? There's going to be like literally nothing in APR, like 1% of APR, maybe, I don't know, maybe less, because there's not much volume, not much artificial reward. And I'm thinking like, okay, which kind of protocol might works to give for retail users a good APR even on the bear market? And I don't know, I have an idea, but what do you think? Like, which type of protocol can give the APR even on the bear market to build on top of them the simple one-click investment solution for the retail user?
I don't know, so please tell.
That's it's just an idea, so just a thought. So I think I literally understand what was in Terra, and I know the Duke One did a few bad things there, but in general, if we extract the Duke One's ego and just look on Terra at all with Anchor protocol, with Mirror protocol, they're the good ecosystem, because the general idea was to give all of the DeGens the ability to hedge into the stable and stocks. So they try to connect a real economy, physical economy with the stocks, with a DeFi, and put it on the blockchain. And the idea behind was good, but what SEC did, SEC says this is all the security and you can do this. And they literally stopped the evolution of this part of the industry. Then a few years later, they also stopped the evolution of the algorithmic stablecoins. And I think one of the ideas here is around the stables. So most of the retail users understand how the currencies works. In any country, we have euro, hryvnia, ruble, yeah, ruble.
Don't take trouble.
Rubles, yens, yeah, francs, etc. And behind all of this, people understand how it works. So if we're gonna give for this retail some kind of stable, which is going to be connected to any currency in their region, and if we give them the APR, and the part of this APR going to be sustainable, that might be amazing. But how to build a sustainable APR? How to build this product? And two ideas only. One is treasury bonds to connect with some treasuries to do support, to receive support from the companies from the real market. And another idea is to build algorithmic stablecoins like Ethereum. It's literally algorithmic stablecoin. But on the bear market, it might be also some problems here. So this kind of part of the industry right now, I'm calling yield-bearing stablecoins. And I think we need to brainstorm about the ideas how we can have this sustainable, even like 2% APR with literally unlimited TVL of the stablecoin. And the one part is to connect it with the real world. The another part is to build some algorithms based on our already sustainable ecosystems and sustainable yields, where we have sustainable yields. So that's the mission of the current coins on the blockchains. So we can say this for sure in a couple more years, those stakers, BEMA or like LIDA, still generate this APR. It means that we can use all of these derivatives as a collateral for the stablecoin. It also means that we can put the interest, generated interest, into the stablecoin and create it like a yield-bearing stablecoin. What's TVL right now in LIDA? That's more than around 25 billions, some kind of. And they still giving a couple of percentage APR on ETH. That's low, but for more than $20 billion, that's enough. That's very good APR. So I think two ways. One way is require more legal part to build the legal structure. Another way is to create some algorithms. And one of the goodest ideas here, if we didn't take the Ethena mechanics, if we're gonna do it based on the validators, based on the proof of stake chains, by staking for the validators, what if we can create some restaking protocol which is gonna give us the stable coin, and we're gonna resell this computing power first, especially for the validators, then for other cases, and that would be the collateral for the stable coin, and all of the yields going to be transferred to this stable coin in RAP version and the base version, rebase version. And this is going to be the fundamental base for one-click investment solution. We're just going to be one button safe and the interest. So that's what I think, but just the thoughts.
Yeah, sounds good. I think actually in this scheme there are a lot of like problems that still like we still need to solve. But yeah, that's in my opinion it's broken. So it might be this like foundation for one button, one click saving solution.
So let's move to the second part with the questions from the audience. All of your ideas, all of your quick questions. Go ahead.
Yeah, thanks. Actually, I think you point out a very important question, like what should be this one button solution for retail investors to put money? And I just wanted to share some thoughts on it as well. So I think that creating a proxy stablecoin is a good solution, as you suggest. But I will also argue that Ethena will not be sustainable in bear market, basically because the on derivatives market, the funding rate will be negative, right? So they will not be able to make any funds. So Ethena is about to break up in bear market for the thing.
Yeah, well, that's literally what we say right now on the stage.
Yeah, well, and I'm not sure. Like, I'm actually disagree because Ethena is using so-called risk-neutral position. Like basically, they hold short and long position in the same amount, and what like they are making money on on delta between future and spot.
Yeah, but they have longs on spot, right? And shorts on.
What do you mean by break? You mean break they're going to crash, or you mean break that they have a low interest rate?
No, I think that it will be negative interest rate for them, so they will not be able to sustain the back.
Like, I think they are actually like making like yield on volatility of assets, and on bear market the like especially like liquid staking derivatives are pretty volatile. So I'm not like an expert in their tokenomics, but I think like at least if somebody is interested in it, at least he should research it further. Because in my opinion, they will be just fine on bear market.
Well, yeah, we'll see. Anyway, I placed a bet on the betting market that Ethena will collapse.
Yeah, they're gonna be fine, but with not so good interest right now. Literally, each product cannot give like a sustainable interest in the bear market. Yeah, well, low users, low trading volumes mean low fees, mean low interest.
Well, okay. Anyway, if you want, we can bet that I want to bet it will collapse,
Fully collapse.
Yeah, like Luna.
Okay.
But yeah, let's discuss conditions.
I can call Seraphim.
To what? To collapse it now?
No, just to defend us.
Okay. Anyway, let's move to the second question. So why don't you think that the simplest MVP for one-click solution right now would be, okay, guys, you put USDT and there is some fund which use this USDT to farm interest in EVA protocol and Storm trade, because I will say STON.fi, but there's the risk of impairment loss there. So it's perpetuals and Lightning protocol. Why it's not the simplest solution? Like one button, you put USDT. USDT is used in EVA and Storm trade. Why not?
Actually, Storm trade they use so-called SLP tokens, and the price of this SLP can be lower over time. So it can just decrease.
Is it common or?
It's pretty common, and actually you can just open Storm Trade Vault USDT and see like price different, like price chart, and overall it's ascending, but at some points it might like
that's a good remark. Then Storm Trade doesn't fit. But okay, let's talk about EVA and maybe DDAST stable pools. Are there stable pools in DDAST?
Yes, there are, and but usually the yield in these pools is like below 1%.
Not enough volatility, I guess.
Not enough volatility, not enough trading volume, very low fees, and so on. And actually, right now we are also like soon introducing the stable swap pools, but still, like, we don't expect huge yields in this pool.
Yeah, I see. Okay. Yeah, actually, another question about STON.fi, if I may. What would you comment about the limit orders? Because it's a shame we still don't have a limit order book on chain, on TON. What are the difficulties?
Actually, there are no fundamental limitations in it. And a year ago, when we first considered doing limit orders, we just did some basic research and came to conclusion that ecosystem is just not ready for them. And I mentioned Omniston as a protocol, and actually, it's from technical perspective, it's an RFQ protocol with pluggable settlement mechanics. And we are considering limit orders as one of these kind of mechanics, pluggable into Omniston. So it will not be from release, but it's already we thought about it when designing its architecture. So there will be definitely limit orders, and they are actually will be pretty close to 1-inch fusion. So it's this kind of orders with the Dutch auction and filling by limited set of resolvers.
Okay, thank you.
Yes, I have one question to Slavik. Let's imagine you start 2 years ago, and what you can advise other startups to do to achieve successful like you have today. Maybe briefly, maybe you can extend your answer.
If we talk about DeFi, probably there are obvious things for any startup to succeed. It's technological excellence, building, understanding fundamental needs of users and so on. It's the same for DeFi and for, I don't know, pharmacy, biotech, and so on. But I think if you talk about specifically about DeFi, the most important thing is building trust of your users. So just never do anything that harms this trust, and always try to think first about what your users will think about this specific feature, situation, issue, problem, bug, whatever. Because obviously there are bugs, and unfortunately there are bugs in smart contracts, and audits don't always help with to avoid these bugs and so on. So trust above all.
Super, thank you. And one more question, if it's possible to share with us, how to attract users who exactly have money?
That's a good question. Well, actually, I have a technical background, and I'm very happy to have a professional CMO who understands in marketing way more than I do. So I usually just try to do whatever he thinks will be best. So probably someone with great marketing expertise will answer this question better.
I'm not the CMO actually, but I saw maybe 500 startups for these 4 months, and what I see usually Like the first and the second question for you. The first question is people barely can speak English. That's the first problem. So while I meet with a startup and they cannot explain what they doing, that's fuck up on the first stage. So, and it's literally half of the startups. So even they have a good idea and a good devs and good realization, if they cannot explain. So imagine they cannot explain to me. It also means they cannot explain to any VCs, to users, to everyone. Literally, they may be barely can, but mostly they understand what they're doing, but they cannot explain. That's the first. The second, usually devs and startups start doing some protocol already, start writing the code, start writing the smart contracts. I think it's totally wrong way. So at first, you need to understand your go-to-market. You can, I don't know, create a mini app, fake all of the front end, just collecting some addresses, just explaining to users what is going to be next. And you need to test the ways how you can attract this audience. Because while you're going to spend money and time building a product, you get the interface, you get the product, you get the smart contracts. And then you don't understand how to sell it, how to promote it. And usually it works like this. Half of the year spend it on the product development, then people try 5 ideas how to attract users, done. That's it. They stop their work. And thinking like, okay, that's impossible to promote. But they doing this like on half of the year they're developing and then testing 1 week and then saying done. Let's put this first week before the half of the year. Literally you just save your time and money. And the other mistake here is to understand your niche. It's just not to do something because you want to do. And there's a proof of concept here. So it's impossible to build product in a startup if you don't want to do it. Like you can go and work for Google, Facebook, or for any startup. If you have an idea, your idea should came from the pain. So you literally understand this is the product, this is the part. Then you need to test the niche. So if it's just covering only your one pain, you are not the target audience. The target audience thinks differently than you, and that's what you need to understand at first. So if you know what is the blockchain, if you know how to use STON.fi, if you know how the swaps works, if you know all of these formulas, you are not the target audience. That's very important here. To understand the target audience, you might cover your pain in just a pitch, and then do customer development. Take thousands of people, speak with them. Does it help you? Does it cover your needs? And explain all of this. And during this customer development session, you're gonna find the more optimized look of your product. And then you can go and spend some money to develop this and cover these needs.
Can I clarify the question in your answer? What the best channels for communicate and find and attract users in our project?
Around the Telegram, the best channels. So it's good to have connection with some KOLs and do better testing inside of the Telegram groups with them. So you just need to propose them some kind of solution and some kind of reward to take around 1,000 people from different places and speak with them, understand their needs, and understand do you cover these needs. Or we still have an ecosystem, we still have niches which is uncovered, like CDPs, CLMMs, even the lending protocols, because we have just EVA. We need to have more the same perpetual DEXs, and that's just a part of the top protocols if we're talking about the DeFi.
And I can add a little bit here, like the best channel to attract audience is organic growth, because like first of all, it's free, but even more important that like if people like tell their friends about your product, that means that you are doing something very right, and like you are solving the problems of your users. Otherwise, they just will not like tell their peers about it.
Okay, thank you. But one more question, sorry. how to motivate them to attract their friends better?
Like I think Pavel actually talked about it recently. Pavel Durov, I mean,
Okay.
that they didn't spend no money on ads for Telegram.
Mhm.
Like I think like if you remember your own experience on like joining Telegram and like advertising Telegram to your friends, then it should look like this.
Okay. Thank you.
It's also, yeah, go ahead.
I'm waiting for next question.
Okay, yeah, there was a second good question, how to attract users with money. If you are doing DeFi, just let's see from the history, from the experience, what it means. It means like, okay, I'm a friend of some people. Imagine Slavik had $1 million and he wanted to find a place where to invest. And I'm coming to play in some evening, in some dinner, and say like, Slavik, look, I have this investment opportunity. Then Slavik challenged me, and then maybe he decide or not decide. It's the same for the DeFi, but the part of the challenge me and understand, is it true or not? Is it safe or not? Already on chain. So right now, if I have a DeFi protocol with generated yield, I can explain to Slavik like, look, this is work like this is the mechanics, this is the tokenomics, that's what we're doing, that's where the yield generate. And then he decide, okay, so I can invest or not. And behind this, that's the general idea. So if you're trying to bootstrap the financial tool, you literally need to have some people around you who are seeking to find investment opportunities. So you can start with them and sell this investment opportunity. And that's also, we can prove it right now. So how many of your liquidity providers you know? The biggest liquidity providers? Are you in the contact with them?
I think yes, we are in the contact around like 30% maybe. So
30.
I know where 30% of our TVL come from.
Okay, so, and the second question behind this, if we just take the whole number of wallets which are provided liquidity into the liquidity pools in the STON.fi, what percentage of this whole database of the wallets provided the biggest TVL?
I think like these 30% of TVL, like
others.
around like few hundred wallets are like related to it.
From the whole database of thousands, yeah?
Like I think around 30,000 or something like that.
So this is it. Like this is the capitalistic world.
Well below 1%.
Yeah, this is the capitalistic world when less people had major part of the money. And if we're going to dive deep into the on-chain analytics regarding how DeFi tools, Aave, Compound, Uniswap, literally from 10 to 30% of all TVL, this is like most of the whales. Now, Aave had really big TVL, but there is just 200 wallets. That's it, 200 people. You literally can call to everyone and say, go in or go out, or we have another investment opportunity. And then all of the thousands wallets is low liquidity. So this is it. And what it means that Aave working, especially for these 200 people. And the same, so if all of these liquidity providers are gonna call you and ask, could you please do us a special feature? Will you do it or not?
Likely yes.
That's it.
But on the other hand, like these 200 wallets, they can actually, they already have the way to invest money to like to make yield and so on. And like DeFi allows possibility to do the same to all other 30,000 people, because some of them, for example, don't have access to banking at all, because they are from Indonesia, Vietnam, and so on. And again, that's probably a good thing about DeFi, that it allows it opens possibilities to people.
Yeah, that's the whole different way. So Telegram had almost billion users. If all of these billion users just invest in $10, 10 billion of TVA. That's it. So, but for them, but for them, this is it's very hard, and there's a big learning curve to understand that. That's why we need all of these one-click investment solutions for this audience. But literally, how DeFi works from a few years before, that's a limited number of whales which are working around protocols, and all of the founders of the protocols, they literally speaking with these whales. And I know also there's a product called like a pocket product of some VC. So VC had the capital, and they store it somewhere. And they think like, okay, what if we're going to invest in some DeFi protocol, especially for us, especially for our money, and we're going to deploy the capital and this application in this DApp, and this DApp got evaluation, revenue fees, and the VCs get more. Like they literally get the shares of this DApp because they invest, they provide liquidity, and it's synergy between this pocket DeFi protocol and the VCs, and that's usually how it works. And in our general financial world, it's called family offices and angel investors, and that's literally how it works. You just need to know them, you just need to speak with them, and you need to provide them some solution. Or otherwise, let's think how to attract retail users in a big map and big way.
Hi, my name is Vladimir. We are from AI project on this hackathon. I have two questions. One in the context. In the beginning of your project, did you use some VC's funds for first versions, or you started on your power, on your invested money in the project development, the first version of your?
Yes, we used pre-seed investment from one fund.
And second question, what do you think about mini app feature in Telegram? Do you use this presentation in Telegram, STON.fi, or not? And do you plan to go there?
We have mini app Telegram, and it's like at the moment it's pretty basic, so it's basically the same UI you can see in mobile web, but within Telegram. And we obviously underutilize the social features possible within Telegram, and we plan to explore it and invest some development effort in building better social experience within our mini app.
If you want, we can help.
But let me elaborate a bit more about it. I know there are a lot of great mini apps built on top of STON.fi within Telegram, and I know some teams behind these projects, and I think it's actually a very good thing that these projects exist. And in my opinion, it's still possible that some of these projects will be even more successful than our own application, and there is like good reason behind it, because we are good at building smart contracts and DeFi protocols, so like foundation of it, and we are not necessarily the best in terms of user experience, and we don't have we have much less flexibility in terms of experiments, and that's a good thing for startups who want to build like social trading around social trading on top of DeFi. So there is like good chance to succeed, because I'm sure there are like some mechanics that nobody didn't even think of. Like, for example, like a year ago, something like click to earn was just impossible. Like, nobody thought about it. But now, like, I think every second mini app is about tapping some hamster. So,
Agree?
like,
Yeah, agree.
Yeah, hi. Question to Vlad. You did a nice observation yesterday about state of DeFi on Ton and crowdfunding platforms. It's also like part of the DeFi, we can say. What do you think is current state of DeFi on Ton of protocols is ready for building like Kickstarter in Telegram or something?
Kickstarter for DeFi, Kickstarter for
In a Telegram,
for crypto applications, or Kickstarter like a Kickstarter.
So basically, idea is that you can crowdfund anything. You can, for example, you don't have money to organize an event like this. You want to organize, you crowdfund this, or you maybe want to start new protocol. Yesterday, you said that a lot of teams, they are kind of struggling with sponsors, with investors, so it's also like the way to raise some money.
This is, yeah, so I think like a Kickstarter to literally crowdfund on everything. We already have Kickstarter.
Yeah.
So it will be very hard to compete with them. It's like we're gonna say, okay, what if we're gonna do, I don't know, BMW concert in Telegram? The same. What can we do? The fundraising, that's a good idea, but maybe not about the fundraising, maybe about the liquidity providing. So a kind of DAO, which gonna works in the crowdfunding way for some rolling funds during some time to collect the investments from the people and then invest it like a liquidity providing. That's also what is very important in new projects seeking for liquidity. And they might be a good idea to have some kind of DAO as a liquidity providing DAO. And it fits the roadmap, it fits the growth of the DeFi ecosystem. So it's kind of in this way. If we take just regular launch pads of the tokens, they already exist. If we think about the meme coins, those already exist, the burning curve launch pads. So what else we need? That's some crowdfunding DAO for liquidity providing. But there's just idea from the stage on the AMA. You need to think deeply on this and do the market research and the customer development behind. So this is it. But the problem is facing the new projects. They don't have liquidity they need it, and we still have wallets with a good amount of liquidity, and they maybe don't know what to do with this liquidity.
But would it be possible, like at current state of Ton chain, to build such DAO?
In technical way, you mean?
Yeah.
Of course. Why not? Yeah. There's already the perpetual DEX. There's an ecosystem there on Ton.
I'm just getting started
DEX.
in a Ton, so
there is a lot of protocols already. So we have the swap aggregators, also the coffee swap, rainbow swap, there works on the top of the DDoS and STON.fi. So that's literally already the part of the DeFi ecosystem. I mean, like even a half part of the DeFi ecosystem.
Okay, thank you.
I got a question for Slavik. You just answered the question, but we got our funding, pre-seed funding in our, how did that process go? How did you know these people before? How was your pitch? Was it a technical pitch, a financial pitch, a functional pitch? Can you elaborate a bit on that?
Yes, I know like this person before, and like I think we met the main partner of this fund more than 10 years ago, and we were like discussing the startup around machine learning. There was no AI word this time. It was like only machine learning and recommender systems. And yes, like 2 years ago, he contacted me and asked if I want to do something for Tom. And actually, like I was in crypto since like for 5 years now, so for 3 years at that point, and I thought it would be a great opportunity. And yeah.
And so what triggered them to invest? So is that the returns that they get, or is that the functionality that you offer? What's the timeline of their, I say exit, I would say for most investors, there is an exit plan somewhere. So how does that look like?
As far as I know, they don't have exit plan for now. Like they are still happy with our projects and their investment. They obviously plan it at some point in the future, but I don't really know the details. And actually, we like speaking of how it started, we actually spent some time with them working on like the concept of what we are doing, because like they initially came with the idea of building a service for like managed service for validators, so running managed hardware for validators, for photon validators. But like I was more focused on DeFi, so I think I'm not probably the best candidate for building like this hardware heavy, solving these hardware heavy problems, and like I'm way better in designing something DeFi.
And but you got the funding for the project. So did you pivot from when you started, or is that still what you had envisioned is still there and you're still moving forward along the same line, or is there changes along the way?
Of course, there were minor changes, but generally it's like the general direction is basically the same. So, for example, when we have started, we didn't think about like RFQ protocols and all that stuff. But yes, AMM DEX is just here.
Like, imagine how it was. So Slavik meets investor, say like there's a ton, we're gonna be DeFi there, we're gonna build first AMM protocol, we're gonna be first. Okay, look, there's a Uniswap, there's a PancakeSwap, and they're gonna be we. That's it. Why not like for the investor being a consensus who build MetaMask, or take with the MetaMask also the Uniswap and the lending protocol. Why not? They're like first in the ecosystem.
But the interesting learning is actually you went to somebody, or they came to you. You knew them already from way past, and I guess these guys here, when they want to raise money, they still have to open up all these doors to make sure that they can get money. And I'll be talking about that later here from the stage as well, how to do that.
Yeah, that's true.
Yes, on one hand, but on another hand, like my journey started, I think, 15 years ago, and like I was CTO in several startups, and actually these startups were not very successful. So they like lived from, I think the most successful one was like worked for 10 years. And least successful one worked for just 1 year. And but yes, I don't think I would be successful on STON.fi if I hadn't that experience. So yes, like it's necessary step. And 15 years ago, there was no guy who came to me like asking if I want to build something for Ton. So it was also part of journey. So guys, let's meet in 15 years.
Hello, Slavik. I have a question for you. How does 2025 looks like for STON.fi? What specials can we expect? Can you share something about the roadmap you have?
Like we are, like we will be pushing the adoption of OmniStone. Like first of all, so again, this is general purpose liquidity protocol that like probably you guys are interested in like technical aspects. This is centralized, at this point centralized RFQ protocol. So like there are two primary roles in it. There is trader and there is resolver. And so like the protocol starts with the trader making some RFQ, request for quote, and like resolvers, like I don't know, like I want to swap 100 ton to USDT. How much USDT do I get? And resolvers reply to this RFQ with the reports, and the protocol selects the best quote and like forwards it to the trader. And so if trader like accepts this quote and starts the trade, then like he gets his USDT in exchange for 100 ton he planned to originally. And like the interesting part begins here, because actually since it's a pretty generic approach, there are many possibilities, like how to settle this trade. The simplest one is just like use some liquidity pool on some AMM DEX to perform swap. Like, I don't know, Nick can connect to our protocol and reply to this RFQ, like please go to dedust STON to USDT pool and like perform swap, and you will get, I don't know what is current rate, 550 USDT for it. And if it's the best offer, it will just win. But for example, it's also possible to perform the swap using some escrow contract. Like the user puts his funds, his 100 ton to escrow contract, and the resolver can like take this 100 ton in return for a specified amount of USDT. And actually this allows the resolver to use liquidity from centralized exchanges to perform trades. And so we can also like build fancy things like limit orders with Dutch auction on top of it. And using so-called atomic swaps, we can also perform cross-chain swap. Like the user gets specified amount of USDT, but in another blockchain. So like there's a lot of great possibilities in this generic approach, and we still need to explore it. I think we are not aware of some some features we will implement next year because it's really cool.
It's like 1-inch fusion.
No, there is fundamental difference. 1-inch fusion, there is no RFQ in 1-inch fusion. Like it's 1-inch who recommends trade price to user.
And 1-inch fusion only use the other part for the settlement. They didn't provide the swaps inside.
Like basically 1-inch fusion uses limit orders.
Okay.
So and the user can put limit order, but he has no information on who can settle it.
Mm-hmm.
And like so, yes, the 1-inch has the same competitions between resolvers that guarantees basically the best possible price. And but the difference is that if the user wants his trade to be settled quickly, he don't know what price to use, and he will probably just select pretty close price, or he will use like Dutch auction that decreases price pretty quickly over time.
Okay.
So
Find the best resolver.
yes, and in our case, like there is possible, like basically OTC trade. If a resolver offers price that is okay to user, they can just perform the trade without involvement of anyone else and do it really quickly. But still, like we like great kudos to 1-inch and Anton Bukov personally, because he is our advisor, and a lot of our ideas are actually from him. And like we have like spent a lot of time discussing all this stuff.
Is Drift a better
Thank you.
comparison than 1-inch fusion?
Could you repeat, please? Sorry.
Is Drift a better comparison than 1-inch fusion in terms of how
Drift.
the orders get built?
Drift? What is Drift?
The perpetual market on Solana.
Sorry, I don't know
Yeah, I didn't get the
anything
question.
about it, so I cannot comment.
Right, no worries.
But I will check. Thank you for pointing. Uniswap X is very similar to 1-inch fusion, and I'm not sure about differences, but like at some point I have analyzed the differences and found a couple of features existing in 1-inch fusion that's Uniswap X is missing. Important in my opinion, of course, but maybe Uniswap guys decided not to implement them. But it was, I think, half a year ago, so I just don't remember details.
Slavik, I have another question. For builders, do you already have something like a program to support builders to build on top of STON.fi with grants maybe or something like that?
Yes, we do. We have a grants program and everyone can apply. And the size of grant is not that big. So it's limited with 10K. But it's still like, it still can be a good start for projects.
Do you have specific requirements as well?
Yes.
Integrated with STON.fi?
Yes, it should be like basically the only requirement that it should be integrated with STON.fi. And okay, there is second fundamental requirement. it should not be something illegal. So no like illegal drugs or something like that. And everything else we can consider. And there are, I think, around 5 applicants each month are accepted.
And are you specifically looking for type of projects you want to cooperate with in specific niches, or what do you have search?
No specific, like we are happy to hear great ideas, and in my opinion, like the broader is the range of projects, the better are like chances to succeed for each of them. So like if we like incentivize one specific type of projects, there likely will be fierce competition in this area. So like in contrast, we are like we encourage to build variety of projects and product types.
Thank you.
So how much we have left? Or we already?
Maybe the last question from the audience.
Thank you. Yeah. Just another question about STON.fi actually. Could you elaborate on the role of the utility token, or just the token, the STON one? Yeah.
It's utility token, yes, and like the primary utility of STON.fi, or sorry, of STON token is the generation of voting power while staking. So we have chosen the model with when staking. The token is staked with lock, and the idea is pretty simple. Like we think that it's important to have long-term exposure of token price for those who vote in protocol. And actually, there were some examples. The latest one probably was in Tron, where somebody like landed a huge amount of TRX token, voted with it, and sold it immediately before like negative impact reached affected token price. So the maximum size, maximum duration of staking is 2 years, and staking on this duration generates maximum possible voting power. And the voting power actually decays exponentially. That's another great idea from 1inch. So like if the like set of stakers of token is constant, their voting power decays proportionally. So like if you have like twice as much, if you have staked twice as much TON as I did, then your voting power is like always twice as much as mine. And in contrast to linear decay, where proportion changes over time. That's basically it. And we are actually working on utility, additional utility of our tokens. And we are introducing from time to time, but probably like I think I already said most part interested to builders, like around building tokenomics and how to do it right. But I will not continue promoting our tokens.
Sure, but yeah, the question is also about the protocol fee. Don't you have a fee on the swaps, and why don't you share it with the token holders?
The answer is simple. sharing it with token holders immediately makes our token security.
So you're afraid of the legal risks?
Not like if we were afraid of these risks, but we want to like avoid these consequences, because I don't think it's really a risk. I think it's something inevitable. It's just basically automatic.
So you think every token which has staking in the future will be
No.
charged?
I think every token that allows yield generation that falls into certain criteria will be, and which market cap rises above a certain level will be automatically considered to be security with all corresponding consequences.
But being locked in the governance, it generates yield, as you said.
No, it doesn't.
You said it gets the emission.
It generates voting power.
Voting power. Yes, right. Okay, thank you.
So thank you so much. Thank you, everyone. That's really productive and effective, and we learned much. Thank you, Slavik.
Thank you, Vlad. And
That's very good demonstration.
thank you guys for coming once again.
Yeah, thank you so much to all who were with us online, and we hear you guys. To those who couldn't join us offline, we will prepare more live streams, and you can follow all our announcements of the live streams from each bootcamp. I reminder that we will have 20 bootcamps all around the world. Please join Dawn Society's social media, Twitter, Telegram, and follow all our announcements. Thank you so much. Bye.